Volatility. Let's bring in J.J. Kinahan, Chief Market Strategist at TD Ameritrade. J.J., a lot of people upset at this dynamic and this action that we're just talking about, the tools that they were using to trade disappearing in their hands. They thought maybe they'd be able to buy on a dip. They can't. What's the justification for that?
So, John, I want to clarify the message that we have a little bit. I can't speak for other firms, but I can speak there. I think some people have misinterpreted perhaps what we said at TD Ameritrade. And here's what it is, John. You can still buy any of the stocks. You can sell the stock that you own. You can't go short the stock, but part of it is, these stocks are hard to borrow. So you have to borrow the stock in order to sell it through retail brokerage firms. So right now, it's nowhere to borrow it from. So you're not shorting the stock. But if you want to trade the stock, absolutely. Now, have we put some higher margins on things? Absolutely we have. Why? Because this is unparalleled trading in terms of volatility. And, when it comes to volatility, people want to trade options. I traded options professionally for 21 years. I very much believe that volatility provides opportunity. However, Lindsay hit on something important, and that is education. If you want to buy calls with us, you want to buy puts with us, go ahead. Why? You can define that risk. You know how much you can lose the premium you're putting up. We are not allowing people, John, to sell calls naked short. Why? In theory, that stock could go up forever. And I know you're going to say, well, that doesn't happen to the stocks I buy, but, that's how we, of course. But in reality, that could happen. We saw an unparalleled move in GameStop as well as many others over the last few days. So we know that this can happen. And with that, we're just putting in rules we think make the most sense for the volatility conditions right now, but still allowing our clients to trade in the way that most clients trade every single day.
And as a CNBC journalist, I don't buy individual stocks, but point taken. JJ, it sounds like there's a difference in policy here between Robinhood and TD Ameritrade, so want to state that. But talk to me about this minefield that retail investors in particular have to navigate in a situation like this. They enter a trade with a certain set of tools and rules of the road, and midway, they're changing. Does it speak to the dangers, the risks in entering into these perhaps crowdsourced strategies of trading at a time like this?
Well, I think the bigger thing is, John, do you understand the risk when you get into things overall? We built a lot of our business on education. We stress it all the time. We saw 3x usage from 19 to 20 as people started coming in more and more to the market. So with that, do you understand the risk of the products you're getting in? Our job is to provide you access to the market, access to these stocks, which we're doing, but are you comfortable with it? Are you willing to take the risk? And do you have the capital to take that amount of risk? And so with that, I believe we've done our job overall of providing that access to the market. I can't speak about other firms. That's, I wish everybody good luck on it because it's bad for the business when any firm is getting hit, so to speak. But for our firm, we feel like this is what we're doing well.
Shepard Smith here. Thanks for watching CNBC on YouTube.